Welcome back to the J22 report. I am your host, Johnnie Market. Y'all know that drill. Smash that like button, subscribe if you already haven't, and give me a follow on Rumble. Just want to do a little disclaimer. Nothing I say on this video or past videos or even future should be construed as financial investment advice. Just my opinions and thoughts on the market. So I just want to do a quick video today. I was just reading, and this is one thing that came to mind. I don't think I talk about this enough. If you follow this channel, you know that I've talked about not the treasury, credit card bubble, the housing bubble, commercial real estate, and the auto loans. Those are the four bubbles I think will pop first. But this is just a long-term bubble that's going to pop. Is This is the treasury bubble. I expect this to pop in like 2032, 34, maybe even earlier. But as you can see, treasury, this is the TLT, the bond ETF, down on Friday, 5 day, actually up on the 5 day, 1 month up 2%, 6 months down 6.92. But on a year, down 6%, 5 year, 37%. If you look at it, this was around 2020, it was at 170. We're in as you know, markets don't go in a straight line, go down in a straight line. I think it's going to sort of go sideways and then make another leg down. Probably later this year or next year. Not really too keen. I don't know if it's gonna if you look at it, it's gone way down. It's due for some sort of either yearly bounce or sometimes markets go down, then they go up for 2 years, and they're just doing that before they go down again. So I think that could happen. And when I say Doge isn't gonna work or it's a joke, I don't mean anything in terms of like cutting USA AIDS bad for society or cutting. I don't take sides on any of that right now. I look at strictly financial markets, and I'm going to do this one first. And this is what I mean. Over the weekend, Elon Musk went to Wall Street and he went to, I'm going to see who was actually there. Let's see. Of course, they did that. So, like, first of all, operational review. The problem with the debt, it's not because it employs too many people. Uh, that's not why the US is in debt. It's because it writes too many checks. I'm not saying the government needs to be downsized, or I'm not saying people need to be fired. I'm not going there, but it's not because it employs too many people. It's because it writes too many checks. And here it is. The billionaire spoke at the event with the wealthiest clients of JP Morgan, interviewed by David Rubenstein. CEO Jamie Dimon was in attendance. Wonder if we can actually get this interview. I'd like to sort of uh and you can tell like it's not going to save anything really. Briefly mentioned, didn't discuss the possible cost savings. But look at the message, and this is why I say it's a failure, and it's not. This is the message. Look, if you're shorting bonds, I think you're on the wrong side of the bet. And it could be for the next 1 to 2 years, but it will continue. And not only that, when one of these bubbles pops, revenue is going to tank. The other thing too is with a lot of these tax cuts, like Social Security is around 25, 26% of the budget. All that is taxed when it's written out. That's a lot of revenue, considering how much that's a lot of tax revenue gone. And no tax on tips. Every night people go out to eat. People spend that every That's a lot of, so I mean, these cost savings are nothing compared to the revenue that's gonna decline. But And this is the guys that they're under, that they're going to save the bond market. And it's not. I mean, I don't think it can be saved. I think the default's inevitable. Uh, Not only is default inevitable, but I think a restructuring, non-Doge like restructuring of what government does is inevitable too. I don't think that will come till next decade, but anyway, but this is what, I showed you the bond market chart and they are scared of it. And even JD Vance said in one of his interviews that high interest rates can ruin their presidency. So let me keep going. There was a couple other things, but yeah, if you look at it, it's a push to make bondholders optimistic. And that's just not, I think we're in a and balanced budget. Look at this. He also have like balanced budget's going to happen. Now, I can't say it's not going to happen because I think if it anything's possible, but I think if it does happen, it's going to be because of accounting fraud. I don't think it will be an actual legitimate balanced budget. I think that there's too many. I don't see any drastic cuts. So anyway, what this has for other markets is if you look at the history of bond bear markets, I was looking at this, you have to go back to the 19th century to see comparable declines. And I highlighted this because I was reading this. We're in the biggest bond bear market. Now, this was, 2023 ever. And you can see, let's go back. Let's go to TLT. And you can see this is from 2023. Let's do a 5 year. This is October. This right here, 95.62. You can see this is where it was when this is where it was 90, 93, 95, 96.52 when this article was written around there. Now it's at 89. So you can tell that look at this. It came back up in December of 2023. It went up, then down again all the way up till April. Then it had a bounce all the way till September of 2024, and then it came back down. As you can see, markets do not go down in a straight line, just like they don't go up in a straight line. Like if you look at it from '06, '08, it spiked up, then it went down, tested all those lows in '06, went all the way up to 2012, came back down, up, peaked in 2014, 2015 significantly down. 2016 went significantly up, then it went down. And then there was starting in 2018, there was a blow off top all the way to 2020. So if you look at it, I'm sure TLT. And now and I think the bear market's going to continue more. I think a new bull market will start after the US defaults. And that's what I think will happen. But this bear market, and it will be some other, treasury note or whatnot. But yeah, if you look at it, let's just go back. And this is good news for gold because this is 1860s. Now the US were on a gold standard. And then they fell during the panic of 1837. And this became one of its largest bull markets ever shortly. And that's what you think. The 1800s was a very bad bear market, but bear markets are the authors of bull markets, and bull markets are the authors of bear markets. So, and here it says 4 decades leading up to 2020, an extended period of falling interest rates after stagflation of the 70s and 80s. So 70s and 80s, as you can say, they don't go up. That was a bear market for bonds. But it was a most of the 1900s was a very, I would say, since after World War One was a bull market in bonds. Now, a bull market as robust as that, with a break with the temporary bear market from the 70s and 80s, which was a huge uh, bull market for gold and very bearish for gold, it's going to be followed by a long prorated bear market in bonds. And that's what we're going to have. It's going to be, I guess the saying is nature's balanced. So a bear market's going to come. So, there's so many like podcasts to talk about, like by 2030, Social Security and Medicare are going to consume all the budgets and more. And even if we cut everything else out, there's so many other people that talk about it. I don't really want to get into it, and I don't want to get into too much politics. Uh, I like reading news about it, but I don't really want to go on public and talk about them. Uh, but yeah, if you look at this will be bullish for gold, and I think it will also. What happened during that 100-year bull market in bonds was also a big bull market in stocks. And I think a bear market in stocks is going to follow this bear market and in bonds. And if you look at it right here, this is another reason we're going to have a bear market is interest payments will rise by at least 100 billion in 2025. And that compounds. So it's going to get more and more and more. Even if they had a balanced budget, interest payments are going to go up drastically on the debt. So it's not going to cut the debt because they would have to have massive budget surpluses, which is not going to happen. But speaking of stock markets, this is what I thought was coming next. And this is why I think we're in euphoria. Retail investors purchased 12 billion in equities last week. Another record. This is a record. This was February 7th, 2025, this article. And if you look at it, ETF/singles, look at this chart here. Let's see if we can move me. It's a record, 2022. And then see this is when it went on another. So 2022 was a down year, and that was the retail record. 2023 was a good year. You got low retail. So if you ask me, it's inevitable. Some sort of. So 70% of these went in the Magnificent Seven, most of Tesla and Nvidia. Tesla's had a really bad week. So if you look at it, retail investors are really bullish on the stocks. And if you look at it, this problem in bonds is, in my opinion, foreshadowing a problem in stocks. And I think in the next couple of years, there's going to be a problem with precious metals too. I think there'll be force majeure and we will have a big deflation. But I think this is why I say for silver, there's only two scenarios. I think it will go to 50 again or around there, and then it will decline. That'll be the end. And I would say about 8 years later, when there's like it will be more gold and silver, I think will be more part of the monetary system. Not just in the East, but I think even in the West. Was Bitcoin's going to be burning a lot of people. And I think it will begin a new bull market again. But I think a blow off top's coming. But if that doesn't happen, let's say it breaks through 50, there'll be a even bigger, more parabolic blow off top than I think, where if you get out at the right time and then get the right bank, million, people that have like a 50K portfolio could astronomically go high. I'm not promising that. I'm just saying, I'm not even saying that's definite, but then it will be followed by a long paraded, 10-year bear market, and then a new bull market will start. But I think those are the real scenarios in gold and silver. And I think the stock market will go, I think it will be, there'll be a new bull market, but I think it'll be like in 2045 or 20. I'll be old. I already have gray, but I'll be really wrinkly skin. I still have young looking skin. And I'll have really wrinkly skin and going to bed at 7 o'clock at morning at evening, 6 o'clock. That's when the new. So anyway, that's all I want to talk about is the bond. This is the treasury bear market that we're in. And just remember my disclaimer, nothing should be construed as financial investment advice. Just my thoughts and opinions, and I will see you next video.